June 2021. A young couple in Phoenix, Arizona puts in an offer on their first home. They've saved for 5 years. They're offering $50,000 over asking price. They waive the inspection. They write a heartfelt letter to the sellers about raising their future kids in this house. They lose the bid, not to another family, not even to a local investor. They lose to an algorithm, a single line of code in an office in New York City that determined this house was worth buying. The algorithm doesn't need a mortgage. It doesn't need an inspection. It paid all cash, closed in 7 days, and offered $90,000 over asking. These companies bought over 200,000 homes in 2021 alone. But these aren't the names you need to know. The name you need to know is BlackRock, the largest asset manager in human history. They don't just own your house, or the house you'll never be able to afford. They own the apartment you're renting. They own shares in the company that employs you. They own the competition that employs your coworker. They own the bank that rejected your mortgage. They own pieces of the social media platform you're watching this on. And they're not done buying. This is the story of how one company became more powerful than most nations, and why you didn't notice until it was too late. Here's a question. Who controls the world? 10 years ago, you might have said governments, politicians, maybe the billionaire class, the Musks, the Bezos, the Zuckerbergs. But what if I told you there's an entity more powerful than all of them combined? One that doesn't need to run for office. One that doesn't need to convince you to buy their product. One that operates almost entirely outside of public scrutiny. BlackRock manages over $10 trillion in assets. To put that in perspective, that's more than the GDP of every country on Earth, except the United States and China. They have more economic power than Japan, Germany, and the United Kingdom combined. They own shares in nearly every major corporation you can name. Apple, they're the largest institutional shareholder. Microsoft, second largest. Amazon, Google, Facebook, Tesla, Exxon, Pfizer, Lockheed Martin. They own significant stakes in all of them. But here's where it gets interesting. They also own significant stakes in competing companies. They own Coca-Cola and Pepsi. They own CVS and Walgreens. They own Delta and United. They own Fox News and CNN. Think about that for a second. The same entity profits whether you choose Coke or Pepsi, whether you watch Fox or CNN, whether you fly Delta or United. They don't care who wins. They own both sides. And this isn't some conspiracy theory. This is public information. It's just information that nobody's paying attention to because BlackRock has mastered the art of being invisible while being everywhere. The future they're buying? It's not some abstract concept. It's your house, your job, your retirement fund, your ability to build wealth and pass it to your children. And they're doing it with your money. Let me explain. BlackRock was founded in 1988 by Larry Fink. Originally, they were a bond trading firm, nothing special. But Fink understood something that would change everything. The future wasn't in picking winners and losers. The future was in owning everything. The key innovation was something called an ETF, Exchange Traded Fund. Here's how it works. Instead of buying individual stocks, you buy a fund that holds tiny pieces of hundreds or thousands of companies. If you want to invest in the market, you buy an S&P 500 ETF. If you want to invest in tech, you buy a tech sector ETF. Sounds convenient, right? It is. That's why trillions of dollars flowed into these funds. And BlackRock controls the largest ETF platform in the world. iShares. When you buy an iShares ETF, BlackRock takes your money and uses it to buy shares in all those companies. But here's the critical part. They hold the voting rights. You own the fund. But BlackRock votes the shares. They decide how the companies you're invested in are run. Now, managing $10 trillion across thousands of investments is complicated. So BlackRock built a system. They call it Aladdin. Aladdin is an AI-powered risk management platform that analyzes over $21 trillion in assets. Not just BlackRock's money, but money from other institutions that pay BlackRock to use the system. $21 trillion is roughly 10% of the world's total financial assets. This system determines what's a good investment and what's not. It analyzes market trends, geopolitical risks, environmental factors, social movements. It doesn't just predict the market, it influences the market by directing where massive amounts of capital flow. When Aladdin determines that real estate in Phoenix is undervalued, billions of dollars move into Phoenix real estate. When it determines that renewable energy is the future, money floods into renewable energy companies. The market doesn't just react to information anymore. It reacts to Aladdin's interpretation of information. Let's go back to that couple in Phoenix. Why couldn't they buy a house? After the 2008 financial crisis, BlackRock saw an opportunity. Millions of foreclosed homes were being sold at huge discounts. Regular families couldn't get mortgages. Banks were too scared to lend after the crash. But institutional investors, they had cash, lots of it. BlackRock didn't buy the houses directly. That would look bad. Instead, they invested in companies like Invitation Homes, American Homes for Rent, and dozens of others. These companies went on a buying spree. Between 2011 and 2017, they bought over 350,000 single-family homes. These weren't apartments or commercial properties. These were starter homes in middle-class neighborhoods, the exact homes that young families use to build wealth. Now, these homes are rentals, permanent rentals. They'll never be sold to families again. They'll be held by corporations, managed by algorithms, and rented out at market rates that increase every year. The result? Home ownership rates among millennials and Gen Z are the lowest in modern history. Not because they're lazy or irresponsible, because they're competing against entities with infinite capital and no emotional attachment to the property. You're not losing the bid because someone offered more. You're losing because you're playing a game where the other side has unlimited money and you have a 30-year mortgage that the bank barely approved. But it's not just houses. BlackRock is buying everything. They're the largest investor in fossil fuel companies. Also, the largest investor in renewable energy companies. They profit whether we transition away from oil or continue burning it. They own shares in private prisons, also shares in criminal justice reform organizations. They profit whether we incarcerate more people or reform the system. They own pharmaceutical companies that make opioids, also addiction treatment centers. They profit from both the addiction and the recovery. See the pattern? They're not betting on outcomes. They're betting on the game itself. As long as the economy exists, they win. As long as people need housing, they win. As long as companies exist, they win. The system isn't rigged against you in favor of one side. It's rigged so that no matter which side wins, BlackRock profits. You might be wondering, why doesn't the government stop this? Great question. Here's the uncomfortable answer. BlackRock is the government. Or at least, they're close enough that the distinction barely matters. When the 2008 financial crisis hit, who did the government call to help manage the bailout? BlackRock. When COVID crashed the markets in 2020, who did the Federal Reserve hire to manage their corporate bond buying program? BlackRock. When the government needs to understand financial markets, they don't turn to academics or regulators. They turn to BlackRock. Larry Fink, BlackRock's CEO, has direct access to presidents, treasury secretaries, and central bank chairs around the world. His annual letter to CEOs is treated like a policy directive. When Fink says companies need to focus on stakeholder capitalism, or ESG, environmental, social, governance criteria, the entire corporate world scrambles to comply. Not because they care about the environment or social justice, because BlackRock controls enough shares to vote out board members who don't listen. This is regulatory capture at its finest. The entity that's supposed to be regulated has become indispensable to the regulator. Let's talk about those voting rights again, because this is where BlackRock's power becomes truly dystopian. BlackRock doesn't just own shares. They vote those shares in corporate elections, board member appointments, executive compensation, mergers and acquisitions, climate policy, labor practices. And because they own shares in competing companies in the same industry, They have a perverse incentive. They profit when competition decreases. Think about it. If you own both United Airlines and Delta, do you really want them competing aggressively on price? No. You want them to tacitly coordinate to keep prices high. You don't want a price war. You want stable, predictable profits from both. This is called common ownership, and studies have shown it leads to higher prices for consumers and lower wages for workers. When the same investors own competing companies, those companies compete less aggressively. But proving collusion is nearly impossible when it's happening through ownership structures, rather than explicit agreements. Now, BlackRock will tell you they're using their power for good. They talk a lot about ESG investing, making sure companies are environmentally sustainable, socially responsible, and well-governed. Sounds noble, right? Here's what's actually happening. ESG has become a tool for control that has nothing to do with genuine sustainability. BlackRock pressures companies to adopt ESG standards. Companies that don't comply face the threat of BlackRock voting against their board members. So companies hire ESG consultants, produce glossy sustainability reports, and make commitments to net zero emissions by 2050. Meanwhile, BlackRock remains the largest investor in fossil fuel companies. They're the top shareholder in Exxon, Chevron, and Shell. How does that work? Simple. ESG is about risk management, not ethics. As long as fossil fuel companies produce the right reports and make the right statements, they get the ESG stamp of approval. Actual emissions, less important. It's performative activism that gives BlackRock cover to continue profiting from environmental destruction while claiming to care about the planet. There's a phrase that's become infamous in certain circles. You'll own nothing and be happy. It comes from a World Economic Forum video about predictions for 2030. The video was taken down after backlash, but the phrase lives on because it accidentally revealed the quiet part out loud. Here's what it means in practice. You won't own your home. You'll rent from a corporation. You won't own your car. You'll subscribe to a mobility service. You won't own software. You'll pay monthly for cloud access. You won't own movies or music. You'll stream them. You won't own appliances. You'll lease them with service contracts. Everything becomes a subscription. Everything becomes a rental. Nothing is truly yours. And who benefits from this model? Companies that own assets and rent them out indefinitely. Companies like the ones BlackRock invests in. Home ownership was the primary way middle-class families built wealth in America. You bought a house. You paid the mortgage. Eventually, you owned it outright. That asset appreciated. You could pass it to your kids. That's how generational wealth was built. But if corporations own all the houses, there's no asset for you to build equity in. There's no wealth to pass down. There's just rent, forever. Here's the really insidious part. Your retirement fund is probably managed by BlackRock. If you have a 401k, there's a good chance it's invested in BlackRock funds. Your pension probably includes BlackRock investments. Even if you're not directly invested with them, your fund manager likely uses Aladdin for risk analysis. So you're funding the very system that's pricing you out of home ownership. You're paying BlackRock to buy the houses you can't afford, which they'll rent back to you at rates that make it impossible to save for a down payment. It's a perfect closed loop. You work for a company that BlackRock partially owns. You get paid wages that are suppressed because BlackRock's common ownership reduces labor market competition. You invest your retirement savings with BlackRock. They use that money to buy assets that appreciate while you rent. Your retirement fund grows, but not as fast as the cost of living increases. You're running on a treadmill that speeds up every year, and BlackRock owns the treadmill. So what's next? What's the endgame? Water rights, agricultural land, rare earth minerals, data infrastructure. BlackRock and similar institutional investors are buying farmland across the Midwest, not to farm it themselves, to control food production. They're investing in water treatment facilities and water rights in drought-prone areas. Because when resources become scarce, whoever owns them controls everything. They're buying server farms and data centers. Because data is the oil of the 21st century, and they want to own the infrastructure. They're positioning themselves to control the necessities of life: food, water, shelter, energy, information. And they're doing it quietly. A purchase here, an investment there. Nothing dramatic enough to make headlines, just a steady accumulation of control. By the time people notice, it'll be too late. You can't boycott housing. You can't boycott food. You can't boycott water. You might be thinking, this has to be illegal. Antitrust laws exist for exactly this reason. Except they don't, not really. Antitrust law in America is based on the consumer welfare standard. As long as consumers aren't being charged higher prices in the short term, it's not considered monopolistic. But BlackRock doesn't charge you directly. They own shares. They vote on boards. They influence policy through their institutional power. Traditional antitrust frameworks weren't designed for this kind of diffuse, structural power. Plus, they're careful never to own more than 10 to 15% of any single company. That keeps them below most regulatory thresholds. But when you own 10% of every company in an industry, you effectively control the entire industry. It's legal. It's just dystopian. So can this be stopped? Can we break up BlackRock? Technically, yes. We broke up Standard Oil. We broke up AT&T. We could break up BlackRock. But here's the problem. BlackRock isn't a traditional monopoly. They don't produce anything. They don't sell anything to consumers. They're an asset manager. Breaking them up doesn't change the fundamental dynamic. Someone will still manage those $10 trillion in assets. The problem isn't BlackRock specifically. The problem is the financialization of everything. The problem is that we've built an economy where ownership is concentrated in fewer and fewer hands. And those hands are institutional investors optimizing for short-term returns rather than long-term human flourishing. You could dissolve BlackRock tomorrow, and Vanguard would fill the vacuum. Or State Street, or a dozen smaller firms that together replicate the same structure. The problem is systemic. Here's the part nobody wants to admit. We built this, not intentionally, not maliciously, but through 1,000 small decisions that seemed reasonable at the time. We wanted convenient investing, so we embraced index funds and ETFs. We wanted stable pensions, so we let institutions manage trillions on our behalf. We wanted efficient markets, so we allowed algorithmic trading and AI-driven asset management. Each decision made sense individually. Together, they created a monster. BlackRock didn't take power. We gave it to them, slowly, incrementally, in exchange for convenience and the promise of returns. So what does this mean for you personally? It means the game is rigged, not in a conspiracy theory way, in a structural, systemic way that doesn't require any shadowy meetings or evil masterminds. It means homeownership might not be realistic for your generation, not because you're not working hard enough, but because you're competing against entities with infinite capital. It means your retirement is tied to the very system that's making it impossible for you to build wealth outside of retirement accounts. It means the future your parents had, buy a house, raise a family, retire comfortably, might not be available to you, not because of your choices, but because the rules changed while you weren't looking. The question isn't whether BlackRock is evil. Corporations aren't capable of evil. They're just optimization machines doing what they're designed to do: maximize returns. The question is, do we want to live in a world where everything is owned by algorithms, where housing is an asset class rather than a human right, where competition is theater and the same entities profit from every outcome? Because that's the world we're building, right now, today. There's a quote often attributed to Antonio Gramsci: "The old world is dying and the new world struggles to be born. Now is the time of monsters." BlackRock is the monster of our transition period, the dying world of distributed ownership meeting the emerging world of concentrated algorithmic control. We're at an inflection point. We can continue down this path and see what happens when one entity owns everything. Or we can recognize that infinite growth and infinite concentration are incompatible with human flourishing. But here's the uncomfortable truth. Recognizing the problem doesn't solve it. Your individual choices, where you invest, what you buy, how you live, they matter for your own ethics, but they don't change the system. This isn't a problem you can solve by making better consumer choices. This is a structural problem that requires structural solutions, policy changes, regulatory reform, a complete rethinking of what we want the economy to serve. BlackRock's quiet takeover isn't complete, but every day that passes, they buy more. Every market crash is an opportunity for them to acquire assets at discount prices. Every financial crisis strengthens their position. The future you thought was yours, the house you'd buy, the wealth you'd build, the stability you'd achieve, BlackRock is buying it with your money, through your retirement fund. And the most disturbing part, there's no villain to defeat, no corrupt politician to vote out, no evil CEO to expose, just a system optimizing for efficiency, a machine doing exactly what it was designed to do. The only question is, what are we going to do about it? Because right now, we're doing nothing, and nothing is exactly what they need us to do.